Hello everyone, today I'm going to be showing you how to start investing as a beginner. Just some things I wish I had as a rookie into trading and investing. But these are just some tips and visuals that I wish could help somebody that was in my position back in the day. So let's just get started. The first thing I'm going to be talking about is the S&P 500. And this is actually the full chart. I'm on finviz.com. I'll put this in the description if anybody wants to look at this. It's pretty cool. But this would be for the whole entire world in every single district, like technology, communications, consumer, and then consumer defense, like a bunch of stuff. But right now we're going to be looking at, just for simplicity's sakes and just for commonality, S&P 500. And this is the one that pretty much moves with the market. It's like the general market basis of what happens. If this is all red, it pretty much means the market is not doing well, and this is all green, it means the market's doing all right. Like, it's pretty simple to understand once you get a hang of it, but the bigger the square, the more market cap the company has, and the smaller the square, the less market cap it has. And technology sector, we all know Microsoft Corporation. You must have heard of Nvidia if you've been on social media in the past couple of years. They've taken a huge increase in market cap in like 5 years. Apple's the reigning king of consumer electronics, probably gonna be like that for a while. And then we got Amazon, which is number one online shopping store in the world, and Tesla, one of the biggest electronic vehicle companies. An automaker. It's just a lot of different sectors. Clearly the biggest ones are the ones with the biggest market cap, meaning that they make the most money per share. And these companies are these are the revolutionary companies of our time. They're going to be big for a very, very long time. You can zoom in and just look at everything. Like recently, United Healthcare just took a dive. If you can see the little charts on it, you can just see that the stock peaked a little bit at like 540, and they released like earnings that destroyed their stock price over just a lot of just controversy, and just they lost a lot of money. But this is just a simple map to show you how the S&P works and how everything is divided up with their 500 companies that are in this ETF. An ETF is an index fund. That's a type of mutual fund or exchange traded fund. That's what a ETF is. But it's like a portfolio constructed to match or track the components of a financial market index. That's like I guess like the very, very Investopedia definition. I'll put that in the link in the description. But to keep going, we're going to look at the S&P over the last 10 years. This is called macrotrends.net. I'll put that in the description too. This one's pretty easy to visualize, for me at least. In the past 10 years, the market has went from 2,000, and let's just say 2,800. This is the S&P 500, to now, which is $6,000. So you would have tripled or at least doubled your money in the past 10 years, and this is 30 years. This has moved like crazy over time, and we can even put for recessions. This has like a couple of visuals. Like anything with these bars, these little opaque bars, is when a major recession happened. So you can just look back in time and see, like, we haven't had a recession probably since, it says like 2019. So this is another really good visual on how money just compounds over time. And this is a resource too that I learned in school that I started using, investor.gov. It's like a pretty good like compound interest calculator if you don't have one and if you don't know how to use one. So let's say we start investing today $50, and we don't even put a monthly contribution. Let's say you put $50 today and you didn't even put extra in it. Let's just put $0 and length time in years. Let's say we put that $50 in the compound. Let's say I'm 21 years old, and let's say I plan to retire at 60. which is the usual age, I guess. Let's just do 60. So let's do 40 years, right? So I'd be 61. And then let's say the interest rate, we can do like for the S&Ps annuals, I think it's 10% at the moment. And variance range, I won't do that right now. It's a little more complicated. And we'll do calculate. So in 40 years, from an initial investment of $50, I'll have $2,262.96 just from compounding the money without any monthly contributions. This is very doable for anybody that is willing to invest, because the market is moving at around 10% a year, and the market's always supposed to go up. Like, theoretically, if the market crashes and we have a recession, that is a problem, but that doesn't happen often. Like, you don't have to worry about the stock market going to zero. Like, the last thing you'll be worrying about is your money if the stock market crashes. Like, there's probably something going on in the world that needs to be addressed, but we're not there yet. You can't really play into fear mongering in that point, so you need to just start as early as possible and just keep your head up and hope everything goes all right, because that's how the market works. You're letting your money work for you, but you have to believe in that investment. And if you don't believe, if you're very fearful, you need to rethink your decisions and maybe put your money somewhere else. But let's say we started contributing monthly $10 to this investment, just $10 every month. We go from $2,000 in 4 years to $55,374. It's just like compounding your money. It never ceases to lose. Like, slow growth ends up becoming safer than trying to make money as soon as possible, like risking everything that you have, like through options or taking high risk investments just to try and catch up to the people that you don't even know. You just need to focus on your own money and try and compound it as much as humanly possible. But today we're gonna talk about how to get started and make like a account with a brokerage. And for me, the easiest one for a beginner would definitely be Robinhood. There is probably nothing at the moment that's as easy to get on as Robinhood. They made it so user friendly, and that's good for them, because there really hasn't been a trading site or a trading app that is as user friendly off the get-go as Robinhood. I started using Thinkorswim with TD Ameritrade, which is now with Charles Schwab. So I honestly don't use that anymore. I mainly use Robinhood personally, but I do have another account with another brokerage, and I recommend that for a lot of people. If you have more money than you want to have in one account, you shouldn't put all your eggs in one basket, in a sense, but that's for a later video. And I pulled this website off the support articles for Robinhood, and I'll put that in the description too for anybody. But what you need to get started on Robinhood is everything. They tell you step by step how to make an account, what investments you can make, everything. You just need to be 18, as it shows here, be 18 or older, have a valid social security number, which I hope you do, and have a legal United States residential address within the 50 states, and then be a citizen or a U.S. permanent resident, or have a valid U.S. visa. With that in mind, you're gonna use that to sign up for the brokerage. So you're gonna need all this information on the sign up page, which we'll get into in a little bit. But this website teaches you step by step. I'm not gonna get into it. I'm not gonna read everything. I'll leave it in the description, but it's fairly simple. It just tells you every little thing that they have about their service, and how you can use their services to invest with your IRA or personal investment, stocks, options, futures. They've been doing a lot of stuff lately. Even sports, gambling, they were getting into, but that's different. But right now we're gonna try and make an account, put in your information, put in a bank that you're gonna use to fund the account, which we'll get into in a moment. And so far, you're gonna try and make sure all your emails are verified and your phone number is verified. Just make sure your identification is verified, because they're very stingy about how they let users sign up in a sense, because you need to verify that it's you, which is a good thing for safety. And as soon as you get your account signed up, you're gonna log in via app or website. Website is very simple. Use laptop or any device that can connect to a browser. An app is for your tablet or phone. I use it mostly on my phone. It's a very good mobile app. Very easy to use. But for now, we're gonna start, make an account, and after you making your account, you're gonna get to a page like this. It's gonna say fund your account, right? You're gonna link a bank account and transfer funds to get more out of Robinhood. It's secure, quick, yada yada yada. But after you start investing, I'm gonna fund my account later, because I'm just gonna show you a couple things on this. Is one of my extra accounts. But you're gonna click fund account, add a bank. So I'll show you real quick. See what it says. They do it through Played. You're gonna press continue, and I'm gonna blur this out. But you're gonna come here. I'm gonna just continue as a guest. You're gonna connect whatever bank that you have. They have a lot of partnered banks. It's almost every bank. I personally would use your main bank account that you have the most power and access to. Don't use like a account that is hard to get access to, just in case there's like a problem with a payment or something. So just use an account that's easy for you to log into from your phone or your laptop, whatever. But you're gonna link it a bank. You're gonna link any bank, whatever bank you have, and after that, you're gonna add funds to the account. So let's talk about the S&P 500 again, like I was showing you before. So we'll just look at SPY, which is the S&P 500's biggest ETF index fund. So this is probably one of the biggest index funds in the world. The other one would be VU. I can show you that right after. It's also another one that mirrors the S&P. But you can also look at the max chart for this on Robinhood. It's fairly simple. In 2000, which is the latest that they have their chart, and you could have got one share for $135, and max time over time they're up 300%. In the past year, they are up 7.39%. So this is essentially just money you're making on your dollar. If you make easy math here, you would do 100, 7% of 100, $7. You would have 7% more than you had before. And with inflation being around 3%, you would do 7% minus 3%. So that would be a 4% gain on the market. So you would be winning at the end of the day. Like anytime you're not losing, you're winning. And that's how it is with investing. So this is SPY, as I was showing you before. It mirrors the S&P 500, which is all of this, everything in here. Every single company is part of the S&P 500, which is also SPY, which mirrors it. But this is a very, very, very good stock to start investing in, especially if you don't have any prior knowledge of individual stocks, like let's say like Tesla. Tesla's one of the biggest. You'll see, like I'll show you market cap wise. Tesla is a very big square in this whole entire map. They have a giant market cap. And in the past year, they're up 80%. 80% on the dollar. So you could have invested $100 and being up 80%, you would have been returned $80 at $180 for the share. But not for the share, but for the investment made. And in Robinhood, especially, they allow for partial unit shares. So that's fairly good for like low funded accounts. So if you don't have that much money in your account, you can still invest like $10 in Tesla, which is a partial share. Have daily options. I'll get into a later video. Options is a little more advanced. It's a lot more up to chance in a sense. You can't really go back and wait and hold like a stock. Stocks don't ever expire. They just lose or gain value. But an option contract, so just plain and simple, is like a coupon with an expiration date. You can only use it up to a certain point, and it loses value the closer it gets to an expiration date. Now I'll show you a lot of the biggest stocks that are all over the market at the moment, like Nvidia. You must have heard of Nvidia from just anything. They're just huge. They have almost a monopoly on graphics cards at the moment because of the AI spur and all that. That's destroying technology, but we'll see how it goes. Nvidia's market cap was around it was like 2 trillion recently, 2.56 trillion. It's one of the biggest companies in the world at the moment, but it's one of the companies that you could have made 1,350% on your initial investment in the past 5 years. It is so ridiculous. Like in 2020, Nvidia cost $7, and today they're $104. It's unbelievable. It happened so fast. Like a lot of people couldn't even time it correctly. Like in 2007, you could have got this 13,000% max time. Can't believe it. But hopefully there's something like that. There's always new moves. There's always new investments to catch in on. There's always new companies that are coming out, and everyone just needs to be prepared and take the time and invest. I honestly hope this video helps anybody just realize that the sooner you start, the better. And compounding is one of the miracles of capitalism, honestly, because it allows you to make money from the money that you already have. And if you take advantage of that effect, you can really get big returns through your life. And I honestly really hope everyone takes that into account and maybe signs up to Robinhood or any brokerage that they want. Any resource I use in this video will be in the link below. And thanks so much for watching. Have a great day. A rich man's